It's the 28th of September, and you're listening to Kopi Time, a podcast series on markets and economies from DBS Group Research. I'm Taimur Beg, Chief Economist. Welcome to our 30th episode. We have traveled far in recent weeks in this podcast. We talked about Brexit with Sir Ivan Rogers in London. We also talked about private digital currencies with Grayscale's Michael Sonnenschein in New York. But today, we are back in Asia, connecting with Manila, where the Asian Development Bank's headquarters is situated. The ADB was founded back in 1966, and its mission remains to promote social and economic development in Asia. Today, the bank plays a large role in the region. In 2019, it made loan commitments amounting to $21.6 billion, while dispersing $16.5 billion. This year, so far, it has committed $11.2 billion in grants, technical assistance, loans, and private sector assistance to help its developing members in dealing with the ongoing pandemic. This is part of a $20 billion package that was announced back in April. The ADB also has an excellent research department, which produces regular forecasts and surveillance reports, along with thematic research. Our guest today comes from that department. Abdul Abiad is director of the Macroeconomic Research Division at the ADB, where he oversees the ADB's flagship publication, the Asian Development Outlook. From 2000 to 2015, he was with the International Monetary Fund in Washington, D.C., where he worked on the World Economic Outlook. His research has focused on financial sector development and international financial integration, fiscal policy, exchange rates and trade, economic resilience, and infrastructure. Abdul, welcome to Kopi Time.
Pleasure to be here, Timer.
Thanks. It's our pleasure, actually. We're going to begin with your Asian Development Bank Outlook 2020, the update that just came out a couple of weeks ago. Tell us your key findings, conclusions, and perhaps also like the policy recommendations at the aggregate level.
Sure, happy to do that. So for your first key message is really that, developing Asia, I didn't think I would see it in my lifetime, but developing Asia will contract this year by our forecast is 0.7%. And this will be its first contraction in nearly 6 decades since the early 1960s. We do expect growth to rebound to 6.8% next year, but that's not enough to get you back to the pre-crisis trend. So this is not a V-shaped recovery. Second key message is that the downturn is broad-based. 3/4 of our developing member economies, so 33 out of ADB's 46 developing member economies are expected to contract this year. There is very wide variation across the across different subregions, and so you have some economies seeing double-digit declines, whereas a few economies will be able to eke out positive growth this year, including China. Third key message on inflation is that you have two offsetting forces: depressed demand, and low oil prices on the one hand. Then you have supply disruptions that can push prices up. But basically, the first two factors are stronger, and so we see inflation pretty subdued at just under 3% this year, and it'll fall further to closer to 2% next year, 2.3%. In terms of the risks that we highlight in the report, really the main risk is the prospect of a prolonged COVID-19 pandemic, which really could derail the recovery. And we have a quantitative downside scenario to think about how big those impacts might be. The two other risks that we highlight in the report are the possible escalation of trade and technology conflict between the US and China, as well as financial vulnerabilities in some economies in the region that could be exacerbated by a prolonged pandemic. On the policy side, it's really, we talk about various policies that are needed. A lot of it is actually on the micro level. If you adopt the right policies, you don't have to generate a trade-off between addressing the health crisis and the economy. So you can actually, there's really no trade-off. You can get the health crisis under control while still allowing the economy to recover. And really, the priority has to be protecting lives and livelihoods. Lastly, I wanted to let your listeners know that the Asian Development Outlook does cover the regional outlook and risks, but every issue, and again, this report comes out twice a year, every issue we also deal with a thematic topic, a development issue, and this ADO update that came out a couple of weeks ago looked at the issue of wellness. I'm happy to chat more about that later on.
Yeah, no, absolutely. Just for the time being, staying at the aggregate level, Abdul, a couple of months ago, you and your colleagues in ADB wrote a chapter in a book on COVID-19 in developing countries. You guys were early in the game. And in it, you had presented fairly detailed scenarios. And one of the scenarios was suggesting that about 22% of the global output loss this year would accrue in developing Asia. And I think your estimate was something in the range of 1.3 to $2 trillion worth of output loss, about 5.7 to 8.5% of developing Asia's GDP. So you just shared with us some of your forecasts. Consider your forecasts in the context of what you had written in that chapter. Are those estimates at risk of being revised up or down?
At this stage, so we're actually in the process of updating those, and we will be releasing updated impact assessments probably next month. And so I can't give you the exact figures, but at this stage, what we're seeing is that the estimated impact on 2020 is actually not going to change that much, and I'll explain why in a second. But what's happening is that we're now expecting that 2021 there'll be a bigger impact in 2021, basically because this whole crisis is lasting longer than we had previously envisioned. Some of the effect is really spilling in over to the next year. So let me just give your listeners some background on what we did exactly in the CPR ebook chapter. And so what we did there was we used country-specific information on outbreak severity, stringency of containment, and declines in mobility outside the home to get a sense of how big the domestic declines would be in various economies in developing Asia. And we combined those expected domestic demand declines with the external hit, in many cases through tourism, for example. And we feed this through the ADB's multi-region input-output table to capture spillovers through trade and production linkages. And that's how we got those estimates that you mentioned. Now, so what's happened since we put those out? So in that report, what we assumed, we had done that analysis in late May. And at that time, where were we? China looked like it had gotten things contained. You were seeing things rise elsewhere, but it was hard to tell how bad things would get. So anyway, the assumption we made at that time was we said, okay, countries that have outbreaks, they'll take maybe 3 months at the short end to maybe 6 months to contain their outbreaks, and then once they do that, they'll gradually normalize activities. And so really what we assumed there was that most of the hit to GDP would come in 2020 with minimal effects in 2021 and beyond. Now, since that analysis was released, what's happened is, as you know, is that the outbreak has continued to spread within the region. It's primarily been in South Asia, India being accounting for the lion's share of cases, but also other countries like Bangladesh and Pakistan. And then in Southeast Asia, you have Indonesia and the Philippines. And so because of that, so the 3 months, yes, some countries were able to contain it, including China, but for many other countries, we've clearly gone beyond that. And so we were expecting, when we do the calculations, that it's going to be bigger because it's a longer containment period. But offsetting that is the fact that yes, outbreaks have become worse, containment will take longer, but what's happened is that many economies have basically eased up on the restrictions. And that's allowed the kind of normalization that we were expecting to see. So you have, yes, longer lockdowns, but not as stringent as what we saw in the second quarter. And so the initial estimates we've done so far suggest that the numbers won't be that far off from the ones you mentioned earlier. What we will see, though, is that especially on the tourism side, for example, things are really spilling over to next year. So, we're now at 6 months since March, and most international travel bans are still in place flights are much reduced, and basically tourism arrivals are like at 90 or to 100% below where they normally would be from a year ago. And so if you think about it on the tourism side, 3 to 6 months is really out of the question now. So 6 months is basically the minimum. And so we have three scenarios. It might be 6 months, 9 months, or 12 months on the, for how long travel bans might be in place. And on top of that, you have a clear sign that even if these travel bans are lifted, a lot of travelers have basically said, we're not going to travel that quickly soon after those bans are lifted. So you probably saw it, that IATA survey that came out. They've been doing it every 2 months. The last one basically found that 55% of respondents said that they would, even after travel bans are lifted, they would wait 6 months to a year or more before resuming travel. So especially for tourism dependent economies, that's going to be a big hit.
No, absolutely, Abdul. I mean, we worry about that. I want to sort of try to pull together three sort of risk factors. Some of it is, of course, mentioned in your report. So you guys talk about the external environment and how external demand pull would be weak. But on that issue, the recent trade numbers coming out of Asia for July and August have been fairly encouraging. And perhaps it's related to the fact that China has turned around, but perhaps also worldwide goods demand does not seem to be that poor, and perhaps because of the low energy prices, it's helping. So I want to sort of keep that in mind while I try to absorb your point about tourism sector not coming back being a very big external risk, that if you put that two together, that, an abysmal tourism outlook, but perhaps slightly better than expected trade outlook, net is the outlook a little better? So that's question one. And the second question is that if you don't have much hope from trade and tourism externally, if you have a large enough country, could you then rely on domestic tourism? So like we have seen in the case of Vietnam, where domestic flights are up on a year-on-year basis because there's a lot of domestic tourism going on. So I'm throwing two things at you. One is this offset from goods and trade over tourism. The other is the scale of the country. I mean, would you like to comment on both of those?
Sure. So trade really has been interesting. So we did see a very sharp and sudden decline in both global and regional trade in April and May. As you've mentioned, that seems to have bottomed out, and we've seen a strong recovery over the June, July data. What's also interesting when you see that pattern is that Asia experienced the same dip, but the magnitude was not as sharp as for the world as a whole, or if you compare, let's say, to the major advanced economies. And when you look more closely at that, there are a couple of explanations. Basically, there are certain sectors which have helped buttress the overall effect of just collapsing demand. So obviously, health supplies, PPEs, medical equipment, and the like. You see countries like China. I think Korea and Taiwan have been exporting more of that. So that's one, and so you've actually experienced positive year-on-year growth in that sector. The other is electronics. As we know, there's a global electronic cycle, and that they went through a downturn last year. There's been a recovery. Just from that, because of that global cycle, it was already in the process of recovering late last year and in the early months of this year. But I think in addition to that, you're seeing an increased demand for electronics products and devices because of the lockdown. You have, again, many of us are working from home. And there's an increase in e-commerce and things like that. So there's that additional factor. So that's helped buttress. And so, yes, that does help soften the blow. Of course, what happens is you have very different economies in the region. So that benefit accrues primarily to economies in East Asia and Southeast Asia, whereas a lot of the tourism-dependent economies, and in particular small ones like the Maldives in South Asia or Fiji in the Pacific, they don't have that. So they're looking at declines of 20% or more. Whereas, so Thailand would be one example, I guess, where you have both, and those factors may be offsetting. So that was your first question. The second question was what again?
About the scale of countries, that if you're large enough, And even if you don't have travel
Yes.
and tourism going on, could you reorient some of your tourism to domestic tourism?
Yes, and so you are seeing that. In fact, we have a box in our report where we talk about travel bubbles. And so my colleague Matthias Helbla did that analysis. There were two parts to that. The first was, in the absence of, given the complete shutdown in international travel, what is the potential for domestic tourism to step in? And so that's the first part of his calculation. To what extent is it possible? And yes, so there are countries, Vietnam being one of them, where that does go a long way into helping soften the blow from the loss in international tourists. Of course, this assumes that you have mobility within the country. So Vietnam has that because they've been able to keep their crisis contained. Well, you had the second outbreak again recently, but even that's been contained. It looks like. So you have countries like Vietnam, but then on the other hand, you have countries where either even internal mobility is restricted. India would be one example of that. But then you also have, again, as I mentioned, those uh, highly tourism dependent economy, or yeah, it gets to the issue of size that you were mentioning. You have island economies almost solely dependent on tourism, and for them, there's no substitute. But with the interesting case, the interesting thing there, Timur, is that um, if you think about the Pacific economies, you would have thought that they would just open up, right? We need it. But they've actually made the decision to stay closed because their health systems are also non existent. Many Pacific Island economies need to fly their seriously ill patients to Australia, New Zealand, or even the Philippines to get treatment. And so for them, even though the costs are so high of staying closed, they've made the decision to stay closed at least until next year because by their measure, if they had an outbreak, they would really be in serious trouble.
It's absolutely fascinating the way these dynamics are working out. I was just reading about Israel, a small country with a very strong healthcare system, and they seem to have overcome COVID-19. But then the outward tourism, Israel is going to Europe for vacation, brought the virus back again, and there's a resurgence there.
Oh, wow.
So, I mean, it is so hard to sort of, declare victory till you have a vaccine or something, and therefore this prolonged lockdown, as painful as they are, there is some sort of wisdom in that. Abdul,
Yeah.
the other risk factor that nobody talks about these days, it seems like, we're in this post-inflation world. Even if we have supply shortages, even if we have, U.S.-China trade tension spilling over into fragmentation of supply chain, nobody worries about inflation. So for the time being, your view also on inflation is very benign for Asia?
Yes, yes, I would say so. Again, one the domestic so the demand weakness seems to be outweighing it for the region as a whole. There are in some economies the supply disruptions are such that they're enough to cause an uptick in our inflation forecasts. But for the region as a whole, yes, we see the domestic demand, the demand weakness, both domestic and external, really keeping a lid. I mean, and again, in many places, you've labor markets have taken a hit. So even on the wage front, there's not much upward pressure on wages. There's the in as you know, several economies in the region have um, started doing the what might be called quantitative easing, and so there there's been some worries about will this be inflationary. One of the things I take as a positive is that macro policy making in general, but all monetary policy in particular, has been quite good in the region over the last 2 decades. And so I do have trust in many of these central banks that they're doing this eh, because these are extraordinary times that need extraordinary measures, but that when time comes, that they will be able to withdraw this stimulus that they're putting forth.
Yeah, that would be the biggest test of resolve. That at one point, do you say that, I'm ready to move on and therefore I will consolidate? I have a feeling it's not going to be for a couple of years. Abdul, the
Yes.
other issue that we always, I mean, you and I both worked at the IMF, and this used to be our bread and butter, was the external funding question, that the outlook for current account in the region, and if regional economies can sort of fund their needs. So I suppose between low energy price and weak import demand, current account concerns are also not exactly paramount as far as you're concerned.
Yes, I mean, for the region as a whole, actually, they really offset. It's weaker exports, but also weaker imports. And we for the region as a whole, we do see the current account balance remaining stable this year and next. It does differ. So Central Asia, which is primarily composed of commodity exporters, they're taking a hit, and so their current account deficit is expected to widen. Another uh, sub-region where the current account balances are expected to worsen would be the Pacific economies, again, highly tourism dependent. They're basically taking a big hit to their main export. And so, yes, but those are both relatively small for the region as a whole. That we do expect that it the external balances aren't going to take a big swing in the major economies in the region. India would be one case actually where, given the extent of domestic decline, you actually see a bigger contraction in imports, and so the external balance may improve somewhat. The Philippines is the same case. But yeah, I mean, all of these are sort of temporary, and then we expect things to return uh, to uh, move in the opposite direction next year.
But Abdul, for countries like India and Philippines, who have traditionally run large trade deficits, the big solace has been transfer payments, remittances.
Right.
What's your sense of how remittances are turning out? Because I think 6 months ago, the view was that we will see an utter collapse in remittances this year. It hasn't been that bad, correct?
That's right. I have to say, when we started writing, and in fact, the first numbers had indicated that remittances across the board were coming down, and what's happened is that in some economies you've seen a rebound. Bangladesh has seen an uptick, other countries as well, and so I th- I think it's a couple of things. One is that the migrant workers are really a necessity in many places where they work. So think about the Middle East and their dependence on it. So to the extent that they need to get their that it's critical for the economies. Many of these many economies that are reliant on migrant labor are basically bringing them back in. Obviously with proper safety protocols, quarantine first, etc. So we it's there are economic forces that that will basically drive a return in remittances, and then of course on top of that you have that to the extent that migrant workers are able to send money home, so assuming that they do have jobs or that these jobs return, it is actually a strong that there is a tendency for it to sort of to be counter-cyclical, in that when when their families and their home countries are taking a hit, that's when they send more remittances home. So it because this was a global shock, we expected that those are the times when remittances actually become pro-cyclical relative to the home countries where remittances are sent. And you did see that in the first couple of months during the peak of the COVID-19 crisis. But what you're now seeing is that as migrant workers are able to reestablish their incomes, then they're sending money back home to support.
Abdul, this conversation is taking me back to a past conversation with Francis Tequila at BSP, when he explained to me the similar thing, that as far as Filipino recipients of remittance was concerned, they only cared about the peso amount. So if the peso were to appreciate, they would expect the family member overseas to send more dollars back. They were hedged, that they would always get the same peso amount.
Right.
It's extraordinary that despite the uncertainty and the hardship that the foreign workers are facing with work stoppages and themselves being exposed to the virus, that they're holding on. Asians are lucky in that regard. Abdul, so far we've talked in general, so maybe we go a bit on a country by country basis. I'm not going to ask you to rank the poor countries. I want you to rank the good countries. So which country, in your view, scores highly in dealing with the pandemic? And that doesn't necessarily mean that that country is also dealing well with the economic side. So maybe you're going to give me two answers: country that is doing very well dealing with the pandemic, and a country that's dealing very well with the livelihood issue.
Right. Actually, I won't give you two answers. I'll give you one. Because again, sort of going back to what I had said earlier. Okay, let's start with those that have done well with addressing their pandemics. A lot of these countries are in East Asia, so China, Korea, Taiwan. Basically, were able to get their outbreaks under control. So China and Korea in particular, they were one of the two countries that really had the outbreaks early on in the first quarter. But again, they were able to get it down. In Korea and Taiwan's case, a lot of it was, again, through using, again, massive testing, tracing, treatment, and leveraging technology. There was and so because they were able to do that, they were able to get their outbreaks under control without stifling mobility so much, and that allowed economic activity to continue. Outside of East Asia, Vietnam would be the example. They had an outbreak early on also, but they were very, very quickly able to get it under control. It stayed low for the longest time, and they had an outbreak again recently, but then we're able to get it under control again. And so, and again, of the countries that I mentioned, three of them, China, Vietnam, and Taiwan, are expected to post positive growth this year. And so it's really not, it really drives home the message that there are ways to both contain the outbreak and to allow your economy to continue working even in the short run. And obviously in the long run, there's really no trade-off, because unless you are able to really get the health crisis under control, you won't have a sustainable recovery. I think what happens, many people think about this trade-off, and you do get that trade-off when you use very blunt instruments like large-scale lockdowns and things like blanket stay-at-home policies or workplace and school closures. That's when, if that's the only instrument you're using, then yes, then that's when you struggle and you have that question of, okay, I can bring the number of daily cases down, but at the cost of rising unemployment and a bigger hit to GDP.
Right. So, Abdul, in my view, countries, it is important that you have the capabilities, but it's also important to have compliance. I think we have seen this issue more prevalent in the West than in Asia, where even if you have strong capabilities, people simply don't trust the system or don't listen, and then they go out and then the outbreak remains substantial. And I fully agree with you that the trade-off doesn't have to be so stark. And I think now that we know, 6 months into this pandemic, more about how to keep the risks down, my feeling is that even if economies see resurgence of virus going forward, activities in agriculture, manufacturing, and mining will not go back to the lockdown levels. We know how to maintain social distancing and wear masks and carry on those activities without shutting things down. So, which is why I sort of concur with your view that even if the duration of the crisis is going to be longer, we're not going to go back to the bad old days of April and May.
Right. So again, there's a lot of learning by doing. It's hard to, easy to, do Monday morning quarterbacking and say, it was wrong to do that. First of all, the large scale lockdowns actually bought many countries time. It was, it's not that easy to ramp up those other measures like testing, tracing, and increased health capacity. And so it bought some time, and some countries have used it to varying degrees. One of the things we have in our report actually is an analysis by my colleagues, Rana Hassan and his team, where what they do is they look at, they take a sort of micro dive at specific policy measures, everything from, stay at home and how much time is spent at home, tracing, testing, school closures, workplace closures, public transit closures, mask use, and they look at two elements: how well are each of these measures, how effective are they at stemming outbreak transmission, which they measure by the effective reproduction rate (RT). And then they also look at what impact they have on economic activity. And so that report's also coming out soon, although we have a teaser in our report on it. And so there you can see that, again, some policies are good at both stemming the outbreak and keeping the economic costs at a minimum, whereas others, yes, they also work on the outbreak, but again, at large economic costs. So I think as this crisis moves forward, policymakers really have the opportunity to learn how to manage this so that, again, it's not a trade-off, and you can get the outbreak under control while allowing economies to reopen.
Right, and you briefly touched on the issue of seasonality. That's the big question as the colder countries in the region start entering a phase when people stay indoors, and what happens there. And then the third issue is, of course, the first issue was the control measure. Second is seasonality, and the third is the herd immunity issue, which remains a nebulous holy grail. I don't think any country in the world has achieved it, and I think the cost of achieving that is also pretty high. So let's hope that between seasonality and control measures, we can sort of figure out how to deal with this thing. Abdul, earlier when we were talking about the overall risks, one thing that I sort of did not talk about in detail was the ASEAN region. So you mentioned the risk of US-China trade war being a risk for trade and sentiment and investment and so on. We know that countries like Korea, Taiwan, perhaps even Japan, we might be inadvertent beneficiaries of the trade war as more electronics trade get diverted through them, perhaps in Vietnam. But within ASEAN, is it really a very big deal if China-US tensions persist?
So we've done analysis on this. Well, as you know, the trade conflict, I think now we're close to basically 1,000 days of this trade conflict, which started in January 2018. And so we've been doing analysis on this, quantifying the costs to the region of the trade conflict. And to get to your question, so the biggest losers from the conflict are the two protagonists, China and the US. So the loss to China, as you know, the tariffs really didn't go away even with the phase one trade agreement. They just put on hold further increases. Right now, I think basically about 2/3 of Chinese exports to the US are still under some tariff, with an average tariff of about 22%, if I'm not mistaken. And in the opposite direction, it's about 80% of US exports to China that are under some sort of tariff with an average tariff rate of about 18%. So it's the costs are still there, and those two countries are suffering as a result. What surprised us when we did the analysis last year on this was, so we knew, okay, on the one hand, Southeast Asian countries and other East Asian countries, they sell intermediate inputs to China as part of Factory Asia, and so they'd take a hit because of that. On the other hand, they could benefit from both trade and production redirection or relocation. And when we actually ran the numbers, what we found was that second factor, the positive factor, the trade and production redirection, actually for some of these economies was large enough to actually offset the negative effects of their intermediate trade to China. And so, as you mentioned, Vietnam, for example, that was one country that particularly stood out because of the similarity of its exports to what China exported to the U.S. And indeed, you saw that in the numbers last year, and that continues. That Vietnam's exports to the U.S. are still growing positively, and it's one of those things that's sort of why they're doing okay, at least in Vietnam's case. And it extends actually beyond Southeast Asia. Bangladesh has seen garments exports also benefit. Garments exports to the U.S. also benefit because of the tariffs being imposed on China. So overall, I would say for Southeast Asian countries, yes, it's not that big a deal because you have those offsetting factors. Um, and they have basically what's happened is that you've had that acceleration of FDI into other emerging Asian economies, including in Southeast Asia, especially the lower income ones like Cambodia, where you have factories relocating. Obviously, if this could escalate further and in ways that we don't that are difficult to anticipate. The technology war is much more complicated to analyze than the trade war, and you can imagine how some of the negative effects of an escalation would be net negative for these other countries as well. So it's as of this point, it hasn't been a big deal. If it escalates, it's really hard to say. I would say that the negatives can easily increase for the other countries.
Right, and especially the trade and services and the access to various social tech platforms or fintech platforms, if those things
That's right.
get in the way. I think some economies in Southeast Asia, I can think of Vietnam and Indonesia as two really exciting spaces where a lot of fintech activity and innovation are happening. You don't want them to get stifled because of all these cross-border tensions. No, point well taken.
That's right.
Abdul. I want to talk about something that you alluded to earlier, that in your second chapter of the Asian Development Outlook, you had a whole section on wellness. Walk us through that, please.
Sure, I can be brief about it, but so we actually started this chapter last year, even before COVID-19 hit, and so and it turned out to be very timely. But let me define first of all what we mean by wellness. So wellness is sort of the active pursuit of holistic health. It's related to, but distinct from, the traditional medical paradigm, which is getting you from negative health, addressing illness, to neutral health. So wellness is really getting us to even better than neutral, right? How can we maintain healthy lives? And it really is multidimensional. It talks not just about physical wellness, but also there's a mental, social, and emotional aspect to it. It's also distinct from, well-being and happiness, which are, subjective measures. Here, it's really, physical and mental wellness in particular. These are, physical health and mental health are things people recognize, and they're actually part of the sustainable development goals. So I think it's SDG 3, which talks about healthy lives for all at all ages. And so we focused on that, and obviously wellness, both physical and mental and other dimensions as well, has taken a hit during this COVID-19 crisis. So you see surveys talking about mental distress being on the rise across many economies. The UN says we're in the midst of a mental health crisis. Even physical health has taken a beating. A lot of us, so again, many surveys point to lack of physical activity being one of the biggest complaints people have during this pandemic. And so what we identify in that study, so the first thing we do is we say, okay, what's the state of wellness in Asia? So my colleagues constructed an index of wellness. So again, there are many similar measures like the UN's Human Development Index, except that those measures also take into account things like incomes, and we wanted to focus just on wellness. So it looks at physical wellness, life expectancy, mortality, etc., mental wellness, social wellness, etc., and we construct those measures to give us a sense of how countries are doing. The other thing we look at is the wellness economy. So the parts of the Asian economy that contribute to providing wellness to people. And one of the interesting things we found is that that's actually a pretty large share of the economy. It's about 11% of regional GDP, and it's been growing pretty rapidly over over recent years. So about 10% on average. And so it really, and this was even prior to COVID. And the drivers of that growth in the wellness economy include, rising incomes, the fact that we're becoming, the rising urbanization and the rise of office jobs means people are there's a more sedentary lifestyle, and therefore people are trying to figure out how to how they can be more healthy. Then you also have the fact that Asia as a whole is already starting to age, again differing across economies. So that those factors were already driving demand for wellness even prior to the pandemic. And our guess is that with the pandemic, as we emerge from this, there will be a renewed focus on, it's really important to stay healthy. As we know, though many of those who were hardest hit by COVID-19 were those who had pre-existing conditions. And so in terms of policies, there are four sort of key things that governments need to focus on. In terms of, one is providing a healthy built environment, and this includes everything from, walkable cities to so encouraging physical activity even in your day-to-day, never even setting aside recreational physical activity. But are you able to walk around? Is there green space? How is the pollution? Are there social spaces for gathering? So even beyond the physical wellness, social wellness, do you have are you encouraged to sort of be out? So for mental wellness, even things like public art. So a healthy built environment on the one hand, encouraging physical activity, but again by providing parks for exercise or other recreational facilities. Obviously, the encouraging healthy eating is also an important component. And then the last thing we discuss in the chapter is workplace wellness, again, because Asia is actually is doing much worse in terms of providing workplace wellness than the rest of the world. I think only 1 in 20 Asian workers benefits from workplace wellness or has workplace wellness benefits, whereas for the global average, I think it's something like 1 in 10. So I'd invite your listeners to take a look at that report. There's a lot more than I can get into in this podcast.
No, it's actually an absolutely fascinating report, and I myself have learned a lot reading this. So great job. See, Abdul, 10 years ago, this issue was not paramount in our minds. But as Asia sort of transitions from low income to middle income, I think people's aspirations are also changing. It's not just about getting a job. It's not just about consuming some basic things. People want a broader set of things to consume, including cleaner things and safer things and sustainable things. So I think you've done a great job of highlighting that point. And I have a feeling you would have to come back to this issue over and over again as you spend your time in ADB.
Yep. I think so. This will just be, again, it's something that will just become more important as Asia progresses.
Yeah, absolutely. Abdul, thank you so much for your time and insights and coming on our show.
Thank you very much, Timer, for having me. Great pleasure. And it's nice to talk to you again.
Absolutely. And thanks to our listeners also. Kopi Time was produced by Martin Tuckey. It is for information only and does not represent any trade recommendations. All 30 episodes of Kopi Time are available on YouTube and all major podcast platforms, including Apple, Google, and Spotify. As for our research publications, webinars, and live streams, you can find them all by Googling DBS Research Library. Have a great day.